Hi, thanks so much for tuning in. Good morning and happy Monday to you. This is Trade Talk on BQ Prime. I'm Mathew.
I'm Hiral. Dadia. Good morning, Alex.
that was a bit of a check in the morning, and of course, Hiral is bright awake and early, just like all of you. And we've got a very special show lined up for you because there's a lot lined up for the conversation today. We're discussing everything from Nifty within 1% of all-time highs, and in fact, touching distance from the 20,000 mark.
It seems like bulls are on absolute roll from here on, Alex.
Yeah, and so we were talking about this last week. The benchmarks, or rather the large caps, are playing catch up with the broader markets, and that interest for the broader markets continues. In fact, we're talking about small caps later in the day as well. And by the way, viewers, in case you have questions about specific small cap stocks that you're holding or planning to buy, we will take all of those questions at 12 o'clock today on Ask BQ. So log in live. We've got two analysts that will give you all of your answers.
Absolutely. And overall, if you see from a market perspective as well, Alex, 6 consecutive session of gains is what we've seen. Clearly, the VIX has also reduced by almost 1.78%. We are in that 10.78 kind of a zone. And you have Bank Nifty, which has actually ended at a 1-month high. That 3 to 4 weeks of consolidation that we saw in terms of Bank Nifty as well, it's out of it, which is giving you some positive signals as well. As you mentioned about broader indices, 10 consecutive sessions of gains coming in terms of the mid-cap as well as the small-cap index. In fact, on a daily basis, you've seen them hit record highs as well. Yeah. And if you see the Nifty PSE, which is the Public Sector Enterprise Index, and the Real Estate Index, these were the top performers as well in terms of Friday's session. So watch out for these pretty closely in trade.
Now, you mentioned the banking index, and we saw quite a bit of a spike towards the second half of the session on Friday, and that's because the Reserve Bank of India announced that measure to withdraw the ICRR, which is incremental CRR, which restricted liquidity in the system. It was an attempt to pull out surplus liquidity from the system. This is going to be done in a phased manner in the coming weeks, and that was seen as a positive. We'll delve a little deeper into that in just a bit. But suffice to say that it was seen as a positive for these stocks.
Absolutely. And with this as well, if you see in terms of individual sectors as well as Bank Nifty, the support is coming in at 19,533 from a technical perspective. Agam will be joining us pretty soon to give us more from an F&O data perspective as to what's in store. Apart from that, sugar companies continue to remain in focus overall, Alex, and this is mainly on the back of the way sugar prices are almost at 11-year high. We are talking about supply constraints in a lot of regions and the yield that could be impacted in India as well. So even Indian sugar prices are inching higher. Apart from that, power, defense and shipping continues to garner a lot of interest. We will be talking about defense, right? Yeah. Pretty soon. But G20 has again got that interest back. We will get more details on it.
And specifically on railways, right? Because you have that massive
Gulf Arab countries that will be connected by railways. So railways and shipping. Yeah. So all of these are sectors we should be watching out for. And in terms of individual stocks, Havells India, REC, PFC, IRCTC, as well as Container Corp. These are ones which actually rose with higher volumes as well. So watch out for these names pretty closely in trade. But absolutely, 20,000 is probably a sight we will see this week. That's what it looks like.
It looks like that. In fact, let's take a check on what the F&O data is forecasting or showing. And Agam is joining in to give you some perspective on that. Agam, good morning and welcome back.
Thank you, Alex. Thanks.
What is it? What are the cues that you're picking up on F&O?
Right. So, well, over the past 6 days, we've seen a considerable amount of bullishness coming in through as far as the benchmarks are concerned. We've actually started seeing a little bit of an up move, especially given the last 6 straight days we've seen gains. Moreover, we are looking at the benchmark index, that is the Nifty 50, trade not only about the 20-day exponential moving average, but we've also seen that move and trade rather above the 7-day volume weighted average as well. Moreover, what we're also keeping an eye on is in terms of your options. We're looking at a 400-point range. Of course, we are at about 19,800 currently at the moment. But on the higher end, we have maximum open interest at around 20,000 call. And on the lower end of the range will be around 19,600. Remind you that this is only for this particular week. In the longer term, we are certainly seeing a lot more bullishness being built up as far as some of these options queues are concerned. Again, very quickly, we are keeping an eye on the 20,000 call. 20,000 mark is essentially what we are watching out for because we're just 1% away from that mark. And we're also seeing a lot of writing on the put side where we've seen 19,800 and 19,700 puts being activated. Finally, a quick look at some stocks which were very active on Friday. Well, there's been a lot of talk around PFC and REC. PFC is one of them. PFC is up to around 12.7%. It's added about 9.7% in open interest towards fresh longs. We're looking at a little bit of short cover in Coal India as well, which is up around 3%, and IEX as well, up around 2.7%, 15.5% added in open interest, also seeing fresh longs there.
Thanks, Agam, for getting us the details. In fact, it's interesting to see how the power pack has been fueling the rally as well in terms of where individual counters go, and that's been the trend, specifically with PFC REC. So I think we'll do a midday check as well as to if this trend does continue. And I think 20,000 is what we will keep coming back to you for. Thank you for getting us the details. But apart from this, moving on, you have the entire defense pack that continues to remain in focus because, Alex, the kind of gains that you have seen as well in the last 1 year or on a YTD performance, the order book is something which has actually kept eyes wide open, right? Execution is going to be key from here on. Saloni is joining us with more in terms of what is in store for the defense companies, and then we will be joined by Kshitiz Mahajan as well to get us more. Saloni, good morning. What do you have for us, and what's the trend looking like for defense companies?
Good morning, Hiral. So as you said, India's focus on the local defense manufacturing has started to pay off for a lot of the domestic firms, which is seen by their rising share prices and order book as well. So shares of defense companies like Hindustan Aeronautics, Cochin Shipyard, Zen Technologies, Mahajan Dock Shipbuilders, among many others, have surged higher than the benchmark so far in this year. And on average, they've tripled investor wealth over the last 5 years. While the Nifty 50 index has risen 9% on a year-to-date basis, the defense stocks have shot up ranging from 26% to as high as 340%, all above the Nifty index. So the defense production in 2023 crossed the 1 lakh crore mark for the first time ever, which was a 12% rise over 2022, while the defense budget also rose 13% to 5.9 lakh crores, which is helping the growth of the order book of these defense companies. So this rally that we're seeing in the defense sector is backed by a lot of factors, starting with the strong order book that these companies have, along with their attractive book-to-bill ratios, which are indicators of a strong order pipeline that these companies will have over the next couple of years. The indigenization mandate, which is the government's effort to promote Atmanirbharta, the declining defense imports and the rising exports. Also, the analysts have their recommendations on several of these defense companies. Most of them have a buy rating. So Data Patterns has the highest upside according to these of around 10%. And Hindustan Aeronautics, Bharat Dynamics and Bharat Electronics have a 1% upside on average according to these analyst recommendations.
Very interesting. Thank you so much, Saloni, for bringing us those updates. And I think that last graphic tells a story, right? So let's get Kshitiz's view on this as well. Kshitiz Mahajan of Complete Circle is joining in. Kshitiz, good morning to you. And thanks so much for joining us this morning. That last graphic that Saloni spoke about had to do with the upside potential from this point, and quite a bit seems to be priced in based on what we're looking at. What's your analysis, and how do you read this space, the defense space?
Morning, Alex. Morning, Hiral. Morning, everyone. I think a lot of fireworks in last 1 year in this space, as the names suggest, and I'm a little worried about, the valuations right now at what most of the stocks are inching up. So, we don't mind giving a let's say, price to earning to various companies which are there in that space, but it has to be supported by earning. I think Hiral mentioned a very valid point that execution capabilities has a big question mark. So there are a lot of these businesses, a lot of companies, whether HAL is there or Bharat Dynamics or BEL or Mahajan Docks, all these are very good businesses. There is no second doubt about it. But point is that the order book which they right now having, whether we have that execution capability in the given frame of time, and what premium you want to give, how much earnings you want to discount over the next 4-5 years to give the present price. So few stocks are actually rallied up really fast, and we have seen that whatever we are talking, the scope, the interest is already being there in the price. So one has to be really watchful while getting into these companies. There is no second doubt about it. Government focus is there. There is no second doubt about it. That was we have to look at making it net export as a sector, and this Atmanirbhar Bharat has actually pushed most of these companies to come up the curve and do things in the right direction. But my only worry is that the valuation, which looks really very stretched. Any company you want to pick up, except for HCL and couple of more, where you see that valuations are a little on a softer side, but otherwise valuations are really stretched. And we have to pick and choose our pockets. So defense companies, many of these companies are actually venturing into railways and other sector also. So it's not related to defense only. They're venturing into privatization also. They're getting orders from other countries also. So we have to actually take a view on a company-to-company basis rather than just going as a sector approach. So one has to be watchful. I know it looks good when you see the returns on the chart that companies are doing well, but if everything is in price, then the upside, the immediate upside can be little limited. Then you can wait for the right opportunities because markets keep on giving you that opportunities on stock-to-stock basis, and then you can take that entry.
Right. So, Kshitiz, everything said and done, from, what could be the growth drivers, what one should be watching out for. However, from the basket that we are tracking so far, where do you see value for an investor to actually enter at current levels?
One is Hindustan Aeronautical Limited for sure, where I see that in a stagger manner one can look at. It's a part of our watch list. It's not a part of our portfolio. I like the company. They listed their facility in Bangalore. We spoke to these guys. So I see that the scope which is building up in aeronautical space is huge, and their maximum part of the revenue is coming from the service part also. So that is one space which we really like. Mahajan Dog, I know, is the darling of the market. The type of return it has given in the entire space is actually very good. But I see that again a very good buy. But my sense is that look at the order book which they have. Good part is that they have recently got shortlisted with L&T for one of the more submarine and ship order, wherein they are working very closely. If that will come, that will become very huge. It's a 40,000 crore order book. So I think we should look at the order book which they are going to have in coming times. That is another stock one should look at. It's a very promising company. But again, one has to stagger. My point is that when you are buying any of these companies, you're buying business and future part of the business. So rather than just looking at just allocating money to stock to have a short-term gain, just do it in a staggered manner. That's the right way to approach these businesses rather than just doing it in one way. So these are the two companies which looks little attractive at this level. You mentioned about data company. I think that's again another company which is right now available at reasonable valuations, where one can actually take some allocation from their basket side. But rather than
No, so fair point. One last question, Kshitiz, because as we mentioned in the start, there are some of these stocks that have gained over 300% and just over the last year, right? So if you have individuals that have bought into these counters and are sitting on a significant profit, I guess one strategy that people employ is to recover their cost price, right? And then to keep holding. Is it now time to take some money off the table, do you think, and re-enter at prices that are better in terms of valuation?
Oh yes, Alex, I totally agree with you. I think this is the time one should actually look at booking some profit on these businesses, because valuations are really unreasonable. I must say this. So looks like that, how many years earnings you are discounted for present valuation. I think that's the right way to look at it. If you are too much in love with this defense sector, there's no harm in taking up some profit off the table and book it, and then keep on looking at the opportunity where you can re-enter at the reasonable valuation. So you don't mind paying a premium to the earnings or the profit which is coming. But in many places, the profit will also looks like decline because of the manufacturing cost or because of the raw material cost also. So you have to take into account each and everything rather than just looking at that I have a gain and I keep on adding. So I think by valuation the stretch, you can look at booking some profits.
Thanks, Kshitiz, for getting us the details. So this is an interesting take because there are stocks which have not really run up, and these could be names where one could be invested in, whereas names like a Cochin Shipyard, Zen Technologies, Garden Reach, Mishra Dhatu, Mazgon, all of these have seen a significant run up on a YTD basis as well. So these could be potential stocks as well, as Kshitiz was mentioning, where you could see profit booking as well and, do a rotation within the sector. Thanks, Kshitiz, for getting us the details. But moving on, as Alex was mentioning about the banking names as well, it's interesting to see because on Friday's session itself, Alex, the Bank Nifty rose almost around 275 points. HDFC Bank was one of the biggest contributors as well to Nifty as well as Sensex, the kind of up move that we saw. And this is again in terms of the ICRR that will be rolled back. On September 9th, the RBI released around 25% of the outstanding ICRR. On September 23rd, they will be releasing another 25%, and the remaining liquidity will be released on the 7th of October.
So it's interesting that you point that out.
They are doing it.
So one aspect is that. The other aspect is what this is, right? This is the cash reserve ratio. It's an incremental cash reserve ratio. The cash reserve ratio is a percentage of net demand and time liabilities, essentially the net deposits that have to be held in reserve with the Reserve Bank of India. And this is now traditionally, if you go back into history, used as something to protect banks in the event of a run on the bank. Of course, it's not used in that format anymore. It's used as a tool to manage liquidity, and it's used as a very blunt instrument. So that was seen when the RBI announced it as a very blunt instrument. It was required because the system was surplus in liquidity. The system continues to be surplus in liquidity at this juncture, and that's primarily because of advanced tax payments and all of those payments that come into the system. At this juncture, of course, you look at managing liquidity as well as the interest rates as the two levers that the central bank uses to manage monetary policy. So if you have liquidity being released back into the system, it's positive in terms of advances being given out for banks. So that's why it's seen
absolutely.
as a positive.
So, the banks will be able to lend much higher than what they were able to so far. And that's one of the reasons why you saw the banks move and probably that up move that could continue in today's session as well. So watch out for all these PSUs as well as the private banking space pretty closely in trade from here on. And the quarter will be interesting because overall your advances automatically will be increasing as well. But moving on from this space, you have the oil and gas space that continues to remain in focus. In fact, Oil India did have their AGM. A couple of takeaways from there for which Mika is standing by to get us more. Mika, what were the key updates from the AGM of Oil India?
Yeah, good morning. So Oil India had its 64th AGM and has set many capex and capacity expansion plans for the future. The company that achieved its highest ever consolidated net profit and gas production since inception has, in a part of its Mission 4+ strategy, it targets to produce 4 million metric tons of crude oil and 5 billion cubic meters of gas in the near future. In its exploration and development efforts, the company drilled 16 exploratory and 29 development wells and is now expanding its operating acreage to 62,911 square meters, which would expand across states. Its aggressive exploration also resulted in a new hydrocarbon discovery in the Assam Shelf Basin, which has now been brought up into production. And discoveries in the Bengal Basin and the prolific oil and gas accumulations in the Krishna Godavari Basin also strengthens the potential for a viable petroleum system in Odisha. Within its city gas distribution segment, the company has obtained rights to 3 new geographical areas for which it plans to set up a joint venture company with a planned investment of over 1,700 crores. And the company's material subsidiary, New Maligraha Refinery, aims to invest over 35,000 crore rupees in over 5 years to complete its ongoing projects and to expand its refinery capacity from 3 to 9 MMTPA. Additionally, the subsidiary is also establishing a biorefinery which will produce 50 TM TMTPA of ethanol, 11 TMT of acetic acid, and generate its own power. This biorefinery will use locally sourced bamboo as well. So it would provide a significant economic boost to the local providers because it would source 300 TMT of dry bamboo annually. And lastly, Oil India also plans to invest 25,000 crores by 2040 towards its alternative energy portfolio. The company will continue to focus in solar energy, green hydrogen, and compressed biogas initiatives. And it's also received an approval for a 620 megawatt solar power project.
Interesting. It's interesting that a lot of these traditional energy providers are diversifying into new energy and renewable energy as well. But shifting gears, one other major theme that has been playing out globally is generative AI. And that interest or that optimism around that space is reflected in NVIDIA's stock price. NVIDIA, not too long back this year, crossed that $1 trillion mark in terms of market capitalization. Very few stocks globally have that distinction. But interesting, the reason why we're speaking about NVIDIA is because it's tied up with two very large groups. One is Reliance Industries and the second is Tata Group. We're going to talk about Reliance Industries and what that partnership entails. Mihika, what can you tell us?
Yeah, so they've tied up to build the AI infrastructure. So what NVIDIA basically aims to do is to develop a large language model trained on Indian regional languages with Reliance. NVIDIA will provide Reliance Jio Infocom access to its most advanced cloud-based supercomputer service, and the AI infrastructure will be then hosted in AI-ready data centers, which will later eventually expand to 2,000 megawatt capacity, and the execution and management will be managed by Jio. And the second deal, which was done with Tata Communications, NVIDIA is to develop an AI cloud infrastructure that enables computing the next life cycle. What this will basically do is result high-speed data transfer for enterprises. TCS, which is Tata Consultancy Services, will then utilize the AI infrastructure to build applications, and then the partnership will be used across AI-led transformations across all the Tata Group companies. Morgan Stanley has also come with a brokerage report on Reliance Industries. It maintains an overweight rating with a target price of 2,821 rupees. Morgan Stanley believes that Reliance will be able to leverage its recent 33% acquisition in Brookfield data center infrastructure. It stated that the first greenfield 100 megawatt data center in Chennai is expected to start its operations by 2023 end and will have an initial capacity of 20 megawatts.
Right, so that's going to be interesting to watch out for in terms of Reliance Industries as well, basis the report that Morgan Stanley has come up with. Thank you, Mika, for getting us the details. But moving on from one conglomerate to the other, you have the Adani Group of companies that continue to remain in focus. And it's interesting to see how promoters are increasing stake as well. Let's head across to Rishi to get us more details in terms of what's the action that's happened. Good morning, Rishi.
Good morning. So far, there are a couple of promoter groups that have bought stake in Adani Enterprises as well as Adani Ports. So there's Kempis Trade and Investments that has bought 0.61% stake on August 21st and 22nd. Similarly, there's Infinite Trade and Investments that have bought 1.46% stake over the first week of September. On account of this, the promoter stake has increased to 71.93% from the previous 69.8%. Similarly, for Adani Ports, there's Resurgent Trade and Investments as well as Emerging Market Investments that have bought over 2% stake, increasing the overall stake to 65.23% from the previous 63%. Now, there's one other news regarding Adani Enterprises, which is it has formed a 50-50 joint venture with Singapore-based Kova Holdings, and this is specifically for sales and marketing of green ammonia, green hydrogen, and its derivative products. So if you see, even the past, a lot of companies are venturing into green hydrogen. So Adani Enterprises is one of the names.
Yeah, that's a 50-50 joint venture, right? All right. So there's obviously that group and the key stocks that we mentioned from the group to focus on. But there is several more in terms of stocks in news that we should speak about. And Rishi, you've got more for us on that list. What do you have?
Yeah, so in line with a couple of more energy stocks, we have JSW Energy, where according to media reports, TPG, Tokyo Electric Power, and Brookfield are in advanced talks to buy a minority stake in JSW Neo Energy, which is a subsidiary of JSW Energy. Now, the overall group is looking to raise about $500 million from this stake sale, which will be further used for more expansion plans. Then there's NTPC again with regards to green ammonia and green hydrogen products, where it has where NTPC Green as well as VO Chidambaram Port Authority will together develop a green hydrogen hub in Tamil Nadu in Tuticorin. Then there's Shah Metallics, which has announced an OFS of up to 5.1% stake for 414 rupees a piece. It's a really long-awaited OFS and stock sale because the promoters are currently holding about 88%. So post the OFS, it will come down to 83%. The promoters have to reduce their stake to 75% as per SEBI norms. Then there is Praj Industries, BPCL, and other ethanol stocks that will be in news because of the Global Biofuels Alliance that has been signed during the G20. Then there's railway and shipping stocks that will be in focus with India, Saudi Arabia, UAE, and a lot of other countries that are joining hands to build a railway as well as a shipping corridor. The port companies like Adani Ports may also benefit. Then there's at IRCTC, where the company has authorized to cater to all coaches at full tariff rates, and the stock actually rose by over 7% after the news came in during the final trading hours of Friday. Then there's Phoenix Mills, which opened a Phoenix Mall at Wakad in Pune, which has 12 lakh square feet of gross space with an entertainment zone covering 1 lakh square feet. Then there's CAMS, which had its investor meet. So a couple of quick updates. Notably, the management has reaffirmed its commitment to increase the share of non-mutual fund based revenue, and it is currently a leader with regards to mutual funds registrar and transfer agent industry. Then there's IRB Infrastructure Developers, where there was an August update with regards to its toll revenue. It increased by about 24% to 417 crores, and similarly for its subsidiaries, it increased by over 20%.
It's an interesting list of names from the broader markets as well, and Shah Metallics does come to my radar as well to keep watching out for, because the stock has run up quite a bit as well, and now you're hearing of the OFS. Thank you, Rishi, for getting us the details. So that's with a whole host of companies from the secondary markets. But moving on, one company that will be moving from the primary market and entering the secondary market today is Rishabh Instruments. Himansh is standing by to get us more in terms of Himansh, today is the listing. If you could give us key highlights for the company.
Yes, so Rishabh Instruments is all set to list on the bourses today, and the company saw a subscription of 31.65 times, primarily led by non-institutional investors. The company is valued at over 2,000 crores on the upper price band. So the energy efficiency solutions provider had planned to raise about 491 crore via a fresh issue and an offer for sale. Now, this offer for sale is primarily the majority of this entire issue, and only 75 crores was laid out for the fresh issue. Now, of this 75 crores, the company plans to use 60 crores to expand for the expansion of the Nasik manufacturing facility. The company had also raised about 147 odd crores from anchor investors ahead of its IPO on August 30. Now, the company focused primarily on electrical automation, metering, measurement, and precision engineered items with applications across power, automotive, and industrial domains. It also has served customers in over 100 countries in the last 3 financial years, and the international market comprises of 2/3 of its overall revenue share. So it'll be key to see how the stock picks up this momentum from its opening at 10 a.m. today.
Certainly, and more often than not in the recent past, you've had new listings that have had tremendous listings. So thank you so much for bringing us those updates, Himansh. And that brings us to the end of this edition of Trade Talk. It's been an eventful one and certainly an informative one for us as well. If you'd like any more details of what we discussed, it's all available on the website bqprime.com. And don't forget, we told you at the start of the show, there's a show at 12 p.m. today that specifically deals with small cap stocks. So if you've got questions for any individual stock that you either hold or intend to buy, do join in live and send us your queries on any one of our social media platforms. Thanks for watching. This is BQ Prime.